But let's focus on a couple of names. Texmaco, they came out with a set of numbers and the stock continues to buzz in trade. Mangalam, tell us more on that name. The street likes the numbers as well as the demerger.
The street likes both the numbers and the demerger. More importantly, the street likes the sector. In the last 1 year or so, if there is one sector which has been on an express train, that is the rail sector, and in that Texmaco has benefited as well. And that's come about in their numbers as well. That's reflected in the way the numbers have been reported too. The overall revenue growth has been 66%. The EBITDA growth of 75%. Net profit growing at 70% itself, margins improving across the segments. Heavy engineering, if you look at it, the revenues jumped from almost 200 crores to 600 crores. Margins tripled out there as well. Steel foundry business. So these guys are getting a lot more orders. At the same time, they're executing a lot more orders at better margins as well. Even though the margins are same, the volume increase would aid their operating leverage, and that's what we are seeing. The question is where it goes from here. To unlock further value, what the company has done is they've gone ahead and announced the demerger of their rail and green energy infra business as well. This accounts for about 30% of their sales. The rail and green energy business in the second quarter saw revenue decline. The company believes this will go ahead and improve once they get a couple of export orders as well. This business could be a business worth nearly 550 to 600 crores on the top line once demerged from the start of next fiscal year itself. So that's something we'll have to watch out for. The current order book is close to around 7,800 odd crores as well. A peek into the future, the current execution capacity is close to 600 wagons per year. They target 750 to 800 wagons by the end of this year and almost 1,000 wagons by the end of next year as well. So those were a couple of positive comments that came in from the management. In fact, we did speak with Hemant Bhuwania, who's the CFO of the company, and this is what he had to say.
This division mainly caters to our EPC segments, that is for track laying, signaling, telecommunication, a bit of hydromechanical and the railway bridges that we cater to. On an average, you see that the turnover has been in the range of around 550 to 600 crore if you see the past trend. So we expect that it would be ranging in the same level as of now. If you see on a consolidated basis, we have an order book of around 7,800 crores as of date. Of which heavy engineering and steel foundry comprise of around 5,600. Our rail EPC, that is Kalindi and Bright Power, as of today is around 1,700. Joint venture and various subsidiaries around 500. Right now, we are at the run rate of around 600 or just over 600. Our target is to go up to 750 or 800 by end of this year. And by mid of next year, we should hit the number of 1K wagon per month. That's our objective.
All right, so that's the view coming in on... we have some Texmaco Rail bites from the management.